Hey guys, what's up? Shane here from AwakeFX. I want to welcome you to this trading video. In this one, I will be discussing the ICT concept of volume imbalances. Now, I did have one of my subscribers at the channel ask this question if I could do a video on this, so I'm happy to help. And if anyone else out there is interested in trading, ICT concepts, live streams, watching me trade live, make sure to like and subscribe to the channel to see more videos like this. Now, let's have a look at volume imbalance, what it is, how it can be used, and I'm going to look at a chart here right now and let's see what it's all about. Right guys, we're looking at a daily chart of the ES, so each candle represents one day here, okay? So the volume imbalance, I'm going to show you exactly on the chart, is a gap between the body of one candle and the body of the next candle. So if you look at candle 1 here, that green candle, and candle 2, do you notice that the top of the body of candle 1 and the low of the body of candle 2, there's kind of a gap there. So I kind of like to visualize it as a little box like this. So we just draw a little box in there. Okay, so the high of the body of candle 1, the low candle body 2, there's a gap. So it's like price closed here and then jumped up here in the next candle and opened and then moved up and away. So usually what will happen is if price is above that volume imbalance, it will like to go back to it at some point. Now, maybe not in the next candle, it could be a few candles afterwards, but price will then eventually want to go in and fill that space in. So why is this important to us as traders is that we may be looking possibly for long trades, for example, on the lower time frames. So we may have this marked up on our chart as a potential turning point. So let's move forward, see what happened on the next few days here. So price moved higher in the next candle. Okay, we moved further away. We actually created a volume imbalance there as well. So I'll just mark that in. You see, between the body of the candle, this green candle that closed, and then the open of the next candle, there is also a volume imbalance there. So let's see what happens next. Right, there we go. Okay, so on the next candle, price moves down through the volume imbalance, down to this volume imbalance below, and nearly fills it in there before bouncing away. These are areas of interest that can have potential turning points in them. So let's move forward here. Price moves up and away. Notice here the candle body of this green candle and the next one. See the way they're even. There's no gap there. So that's normally the way candles would form. One closes, the next one opens. So we're looking for the volume imbalances when there's a gap. Same with the next one here. That's not a volume imbalance. The close of this candle body and the opening of the next one's around the same level. So we'll just keep moving forward here a few more candles. Okay, moving forward. Okay, this is interesting, this one here, okay? So let's zoom in there a bit. There is a volume imbalance here between the close of this green candle here, see the body high, and the body low of the next one. We also got a wick pushing downwards, rejecting lower prices on this second candle here. So what happens on the next candle? Price comes down exactly into that volume imbalance before bouncing away higher. So these can become like support or resistance areas. They can become support areas when price is moving higher and the volume imbalance is below, it becomes support. So if you look down at the very, very bottom here, we had price move up, volume balance left below, and it becomes a support. We move up, volume balance below, it became a support. Here, we had to move up, the volume balance was below, it became support on the next candle. So let's keep moving forward. Okay, here we can see there's another volume imbalance. You're beginning to get it now? So look at the body of this candle 1, candle 2. There's a gap, okay, between close, the high of that candle and the low of that candle's body as well. So that is your volume imbalance. What will happen next? See, price comes down, bounces away. Okay, so if the volume imbalance is below, price will like to bounce down and use it as a potential support zone. So it's good to know this information. It can help you with your lower time frame trading. Now here's an interesting one, okay? Price has moved lower here on this candle. It's taken out the lows of the previous candles on this particular day. See, it's a much bigger body. It's a move lower, but there is a volume imbalance in here. Now the difference with this one is that the volume imbalance is above where we are at the moment. Okay, so this volume imbalance is the current price is down here. That's the close, and the volume imbalance is above. So this can become a potential resistance zone moving forward. So price might want to go up into this area. Let's move forward. Price moves down. Oh, that's where we are now. So this is current day, the 21st of April, 2023. Today is the 22nd of April. It's Saturday when I'm making this video. So let's see what happens next week. Will price want to go up and hit this zone and maybe move lower? So this can be an inflection point where there could be an area of interest. So if we zoom down, for example, to a 15-minute chart here, right? So here's a 15-minute chart of the ES. So what's above us there is that volume imbalance. And how I would be looking at this or using this is as an area of confluence or an area of position of interest. So let's say, for example, we see prices here right now at the moment, okay? And let's say next week price decides to move higher. Because this volume imbalance is above us, I'm a little bit more bearish rather than bullish. And if you've watched some of my previous videos before, you know kind of how I trade with, I would mark up my buy side area as this, see this high over here? I would mark that up as my buy side. And I would be looking generally for shorts up in this zone. So it's interesting how the buy side of that high of that swing point, so there's a major swing there, lines up very close to where this volume imbalance is. Price could potentially next week maybe move higher, let's say from where it is at the moment, may or may not, but if it does, and if I see a situation where price breaks above this buy side into the volume imbalance and then maybe comes down and creates a market structure shift, this is the kind of area I might be looking for a short. Okay, so that's how you kind of use the volume imbalance plus other things that you use as part of your trading strategy, like previous swing highs. But we need to see what happens in this zone. So that's how you can use the volume imbalance. When people talk about daily bias, the volume imbalance can be a form of daily bias. If it's below you and price starts moving down, that can be a zone where you can look to buy. So it can help you have a bias long. And if the volume imbalance is above and the market has moved lower, it can give you a bias that where we are moving short potentially in the coming days. And all of this is fractal, so it works on all time frames. So as you can see, guys, the volume imbalance is very interesting. Definitely use it in your trading. Have a look back on charts, especially the daily, the 1 hour, kind of slightly higher time frames, and mark out these volume imbalances. Zoom down to the lower time frames and see how price reacts around it. You might find some very interesting clues that can help you in your trading. So thanks for watching if you made it this far. If you haven't subscribed to the channel, I really appreciate each and every one of you that are subscribers, and I hope to speak to you all again soon. Thanks for watching.